Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Friday, September 30th. Jen Amos is off today. Stock futures are pointing to a lower open on Wall Street, and the markets across Europe and Asia are also closing out a rough third quarter with losses. Concerns about slowing growth in the world's second largest economy are weighing on luxury goods makers around the world. HSBC's China Purchasing Managers Index showed a contraction in the Chinese manufacturing sector in September. The index remained below 50 for the third straight month, the longest slowdown in output since 2009. Both domestic and overseas demand for Chinese goods remained weak, but there were some signs of life within the report, indicating that the country's slowdown may be starting to stabilize. The data sent stocks across Asia lower, with Hong Kong's Hang Seng Index dropping more than 2%. We're seeing even broader declines across Europe on renewed concerns about the sovereign debt crisis. Germany's economy minister said that after approving expanded powers for the European Financial Stability Facility yesterday, lawmakers are unlikely to back any further increase in the rescue fund. Traders are taking those comments as a sign that European leaders will not move as quickly as hoped to contain the debt crisis. Those fears are weighing on the euro this morning, pushing it back below $1.35, and investors are once again buying up U.S. Treasuries, sending the yield on the benchmark 10-year note well below the 2% mark. Meanwhile, the dollar's strength, as well as concerns about slowing demand from China and Europe, are weighing on oil prices. Right now, crude is dropping nearly $1 to about $81.40 a barrel. Gold is holding steady around $1,620 an ounce. Those asset markets may move as we approach the market open and traders digest the day's economic data. Right now, they're reacting to the August Personal Income and Spending Report, which includes a key inflation gauge. I'll bring you all those numbers after the opening bell. Then later this morning, we'll get a look at manufacturing in the Chicago region, and Reuters and the University of Michigan will release their reading of consumer confidence for September. On the corporate front, we have new developments on two M&A deals. Invesco is teaming up with Square Mile Capital Management and Canyon Johnson Urban Funds to buy a portfolio of loans from Bank of America. The performing and non-performing loans are in commercial real estate across 16 states and have an unpaid principal balance of about $880 million. Meanwhile, the Wall Street Journal reports that McGraw-Hill is in advanced talks to combine its S&P indexes business with CME Group's Dow Jones indexes. That's the latest from Weiss Research. I'll be back after the opening bell with all the market-moving news, including that personal income and spending report and disappointing quarterly numbers from one of the world's biggest chip makers.